All right, just a little recap because tomorrow I might not even be able to trade in the morning when I want to. I got to do something early morning. So let's just go over the two trades that I did. It was at 10:30 and 10:31 on Nasdaq and S&P 500. Let's first do this one because I got stopped out literally the first 5 minutes, not 10 minutes. So basically, I was looking at it. I marked out what I normally mark out: highs and lows of London, Asian, and previous New York session. I would then look at the market to see if there's any fair value gaps forming. So you could see in the 15-minute marker we have one here, and then we see it touches this New York session low, previous low, goes into this fair value gap, goes above, touches the Asian session high, and then touches back down into this fair value gap and actually below the New York session low. And then it fully forms above this fair value gap. Maybe we could get a better look over here. I think this was it. So it formed back up above this fair value gap. Maybe there's a fair value gap here or something. Did I hate how it just takes you into the middle of nowhere? Yeah, a little fair value gap here. Goes above this fair value gap, fully forms above it, fully forms above the previous fair value gap, and then it fully forms above this liquidity spot, which is 638 London highs. I guess this is technically London highs, but like early London, I guess you could say. Fully formed above it right here. Went back down to previous liquidity points. Wait, I think I just said that. Fully formed up here above it. And then I looked at this fair value gap and I'm like, if it fully forms above it on the 1 minute, I'm just going to go in. Because my thought was it's just going to touch up, maybe touch down here and then go up. One thing that I wasn't really thinking of is the, I guess, risk management of it. So I could only risk 1%, which I've been doing a little bit more than 1%. I've been doing like 1.2, 1.3% of my total thing, which I'm fine with. Yeah, I don't really care if it's that like zero point 0.5 more. I probably should start caring, but this is only my second day actually doing this. And I want to do two different trades a day, one on NASDAQ, one on S&P. That's probably not a good reason, but um, I had my stop loss like over here, right below this liquidity point, when I should have had it at least under this fair value gap, this 15-minute fair value gap. I took note of that. Actually, I think that's a 1 hour. Oh my gosh. Oh my gosh. No, I don't know why I wrote 1 hour. I think I meant to write 15-minute. Let me fix that real quick. 15-minute fair value gap. So let's go back to 15-minute. Um, so it stopped me out right above the fair value gap forming, and then went up to this liquidity point. Oh wait, no, that would have been my take profit. Um, my stop loss. Oh shoot, my stop loss was at this liquidity point when I should have had it below this fair value gap. But I think the problem with that would have been, so this is where I bought it at. This was my liquidity. If I had it below, oh okay, no, it would have been. No, I'm just tripping. So that would have just been 1-to-1 risk reward. I'm fine with 1-to-1, honestly. Ideally, you don't want to risk 1-to-1, but I'm still learning. Hopefully it gets better. It ended up taking a previous New York session high, but I'm pretty sure the reason why I didn't do it is because I didn't have it all the way up here. I think I didn't. I was uncertain of it hitting previous New York session. I think I had it literally at this right here, this high. So that's why I did right here where I did. Maybe I wanted it better, even though, I don't know. I should have thought more clearly. But if I did that, I would have made profit, because if we look at S&P, well, if we look real quick, I got stumped out here. It went even lower, went back up to where I started in, and then it hits this fair value gap all the way down here. Very big. I think this is SMT right here. So I got in here, so same time, and it goes down here, and then it stops below it. So this, oops, I'm pretty sure it's called an SMT, like this. Well, what do I do with that information? I'm not really too sure. But for this one, it basically same thing. On the 15-minute, it formed this fair value gap, and then I think on the 30-minute, it formed this fair value gap. No, maybe on the hour. Man, what the hell am I talking about? It's a 15-minute. I forget what this formed on, but it definitely formed on something. I literally just did a trade recap to myself, and okay, 30-minute, bro. What am I? Oh, I was looking at this. Okay, my gosh, bro. I'm a bit tired. So yeah, 30-minute fair value gap over here, and then I think that was 50-minute fair value gap down here. Was waiting for it to go above. It hit this. This would have been Asian session. Not even low, but it went down here. It kind of did a liquidity sweep. And then I was looking for a break of structure, I think, but it was kind of just being weird, like got breaking structure and whatnot, like boom, broke structure. So downtrend, up, down, broke, up, up, up. So I waited for it to fill this fair value gap, and then fill this fair value gap, and then as we can see, it kept touching back down, filling in these orders, and then kept touching back up, and then I waited for it to form above the what is this, New York session low, above the New York session low, and then it did. I feel like the 15-minute maybe it would be better. And then it formed above, and then I'm like, all right, sick. This is probably a good time. I think I was waiting for more confirmation over here, maybe for it to go above this. But I'm like, all right, this is probably a good spot to get up to, because it kept touching down and going up. So I bought in here, and then I think my stop loss was, I think, down here or down here, and my take profit was up here. It was like a 1.05 when to risk to reward. So I'm sticking to like smaller risk to reward ratios. yeah, obviously keeping it above one, but like yeah. And then over here, I was just looking at what the hell is going on because this was like in the span of 5 hours. I like after this, I just walked away because I just kept checking it on my phone and didn't seem like anything was wrong. So obviously it went down a bit. I was losing. I had the thought of like, all right, I'm just gonna sell, take a loss, whatever. I already lost the $510. Oh yeah, so I lost the 510 on this when I got stopped out. Um, and then I'm like, no, what am I doing? I gotta trust. I gotta trust the confirmations. And then it ended up going above New York session high, well above my take profit. And if we look, I'm finally above. I'm finally above the. I'm in green. I was in red for so long when I was trying to do crypto, and I literally had no idea what I was doing. That was like my second day on TradingView paper trading, and I just because I won like 500, and then I'm like, bro, it's so easy, man. And then I just kept doing it, trade after trade. I was down like 2 grand, but we finally made our way back. Now I'm in green, so that makes it 3 out of 4 trades using simple building blocks. Um, it's only day 2. I'm gonna try to not get. Well, I'm not gonna get cocky at all because, well, I'm not really making money. It's just educational purposes. Um, but yeah, so this is what I have so far. Actually, I'm trying to keep track. So this date is yesterday and today. The time, what I traded, entry and exit price, risk to reward, whether I won or lost, how much I won or lost, and then any notes. And yeah, so tomorrow I'm gonna try to trade. Probably, God willing, I don't know. It's definitely not gonna be when it opens, but yeah, I'm still gonna make a video regardless. So yeah. All right, that was a mini recap, and then on to the next. Let's get it.